Hey guys, Akil Stokes here. Hope you're ready for another trading video. Got a cool one in store for you today, talking about technical analysis and trading psychology. Before we hop in, however, I want to say a big thank you to all of the new subscribers that have joined. There's lots of content on this channel, updated daily, and well, I hope you find it as a place that is positive in your trading journey. Today, we're going to talk about a common trading problem, and that is going to be missing trades. Now, before you feel bad about yourself, everyone misses trades. Your successful traders miss trades. Your struggling traders miss trades. The difference is what types of trades they miss and how they handle the situation when they do miss it. And I don't want to bury the lead here, but in today's video, we're going to talk about two paths that you can take if you find yourself missing trades. One will lead you to profit potentially, and the other one most definitely will lead you to the opposite of profit, losing money, bad stuff, right? Anyway, let's hop in and I'll join you a little bit later with a follow-up to what we spoke about and of course another announcement about that big event that's coming up. Dollar Canada was the head and shoulders. Oh, bugger. We're not good. We're there. Okay. Dollar Canada. I let out a bugger. I've been hanging around you UK people for too long. Dollar Canada, if you guys remember yesterday, we had our interest rate decision and all that fun stuff, right? But we were looking for two things. We were looking for a breakout of this consolidative zone. I thought we were going to break out to the upside, but then we had the interest rate decision thing, so that was going to throw everything out of whack. And we ended up breaking up to the downside. We then obviously broke out more. But here's what I was looking for today and yesterday, where here was our consolidative level, right? If you guys remember, the false break was right here. We broke down to the downside, of course, broke down to the downside. We can't break down to the upside, Akil, words, right? And then we came back up. And you guys can see a beautiful head and shoulders pattern, right? It's a beauty of a head and shoulders pattern, right? Classic. This would be one I put inside a training course, right? We have a clear directional move to the downside. We have a retracement, structure shelf right here. We have an extension down. We have a pullback to our previous neckline right here. We have a failed extension down, and then we have a violation of the neckline. Again, if you are a slanted, I'm a horizontal neckline trader, so I picked the highest point. My neckline would be right here. If you are a slanted trader, this would be an upward slanting one, which would probably make life a little harder for you, this dotted line. And what I was waiting for is simple. Break and close above the neckline, which validates the pattern. A pullback, and then the level that we were looking at yesterday, the zone, if you guys remember, was right in here. Now, what has happened? These are Akil's 5 famous words. Yeah, 5. Yeah, got it. Yeah. What has happened so that Akil is no longer interested in this trade? Once again, it starts with, there we go. Get it tattooed on your chest. The move has been made, right? And this is a very important part of trading because we don't want to chase trades. The market, we were waiting for something to happen. The market did what we thought it was going to do. It sucks when the market does something. You put in all this time of analyzing the market, and it sucks when the market does what you expect it to do, but it doesn't give you a chance to be involved because obviously it went straight up there. It's at this point where you have two choices. One, you can be like, and this is how the professional trader handles it, tap yourself in the back. And why would you tap yourself in the back, Keel? It's a mistrade. Well, is it a mistrade? It's not a mistrade. It never gave me an opportunity. A mistrade is one where it's a trade that I was supposed to take that for whatever reason I missed. Maybe I got scared. Maybe I wasn't near my computer, right? There are different types of mistrades. This is not a mistrade because it never gave me an opportunity. I was never supposed to be in it in the first place. So I tapped myself in the back and said, hey, man, you made a damn good prediction, Akil. You don't make any profit from it, but it gives you confidence. And confidence will give you profit in the future. I'll tell you what. The power of confidence in trading is underrated. I don't know how many of you guys have been trading for a long time, but when you are, but there is such thing as overconfidence, so we don't want to take it there, right? But when you're confident in trading, man, You're taking what you're supposed to take. You're executing your edge. When you're unconfident in trading, let me know if I'm wrong here. I don't know if you guys have ever been unconfident. When you're unconfident in your trading, you can't see any signals. Have you guys ever been there? Still to this day, I have unconfident periods, and it feels like I forget. It feels like I forgot how to ride a bike. Like Taz will email me, "Hey, Kill, is that a double top there?" And I'm like, "I don't know, man. I don't know." Like my eyes are deceiving because you have no confidence. It happens to me to this day. Usually like once a year. If usually when I go through bad like losing streaks. I haven't had it this year, knock on wood. But usually once a year, I get a point where I just can't see it. Like I don't trust anything I see because I just lack confidence. So building your confidence, even if you can't make profit off the trade, because like what's one trade? It's not gonna, if one trade is going to make or break your trading year, then you got some risk management issues going on there. But building confidence is fine. So that's what the professional trader does. They tap themselves on the back and say, "Man, good prediction. Let me build this confidence." The unprofessional trader is upset that they missed it, and they try to enter again after the move has already been made, forgetting that their prediction wasn't for the move to be made twice. It was for the move to be made. And once the move has been made, it's over. You don't want to do it again. But because they missed it, and they're upset that they missed it, and they have to get revenge because how dare they miss profit, they enter in some form or fashion, and they end up ultimately losing money. And now instead of just missing profits, quote unquote, missing profits on a trade, they've now gone backwards because they've missed profit, but then they gave money back to the market trying to chase the missed profit. So it's like they shot themselves twice when they shouldn't have been shot at all. So what you should do is look for the next opportunity. So you said, I say, "Hey, Akil, my expectation that price is going to continue somewhere to this zone, right? I'm conservative, so the bottom of the box is where I like to look for targets. The top of the box is the extreme. Where, if price is rallying up, and I want you guys to answer this for me, where is price likely to terminate at? Where is the last smidgets of profit likely to be taken out of the market by these bulls? These bulls ran it up from 139.2 up to a psychological level, 140. I might have given away the answer. Shoot. Forget I said that. So instead of chasing this trade as I get undistracted and saying, how can I take advantage of it? Let's just look for the next opportunity, right? The upper echelon of my profit target area would have been right here. This is my expectation of where price is likely to run into some trouble. Why? Because there's structure there, and I'm a structure guy. So I can ask myself this: all right, if price runs right up there, is there a counter trend trading opportunity? Would you guys see one? Sure, right? RSI is already a little bit, I need to zoom in a little bit. I can't quite tell, guys. I need your help. Oh, man, you think we're overbought a little bit? I can't, this is a close one. We're flipping overbought. Look at it. My extremes are already super overbought at 80 instead of 20. We're at 88. Yeah, we're overbought. Because we've seen that massive momentum in the market. We're due for some type of correction. So going off the same thing we did in the previous example, let's look for an RSI extreme. Let's look for, what'd you guys say, a higher high, higher close. In this case, it would be a lower low, lower close, or a double top. And boom, that's a legit structure-based trading opportunity. And where can you trade it down to? Well, our previous level of structure, right? The same shoulder area, or neckline area, that we broke before. And now you've got yourself a situation where maybe maybe we come up here. Maybe we do a little bit of this. Maybe we look for a move down there. And you got yourselves a pretty decent risk reward on a trade. Boom. And of course you can add whatever else you want. We've been talking about Keltner channels all week. You can add Keltner channels. We're clearly trading outside of the extreme, so check that off as your CTS score as well if it's in there. Structure, RSI overbought, Keltner channel, outside band, 140 even handle number. I just add to the list, but you can see that could be another decent trading opportunity. So don't rush to catch up on the previous trade, which is already gone. She's gone. Let her go. You never had her. But look for the next potential opportunity. So it's almost 9 o'clock at night, and I've been putting this off almost as long as I can, but the eyes are getting heavy and I need to get to bed soon. But I've been waiting all day for a trading opportunity here on Dollar Canada, just as we spoke about in the live room footage that I shared with you earlier. Here's the thing though. We came up and we did exactly what I thought we would do. We came up to our previous level of structure. We got a very nice 3-bar reversal here, right? High momentum candles coming up. Boom, boom. Nice rejection candle right here. Boom. A break and close below right there. Boom. The only problem was I did not get the necessary risk reward in order to take the trade, right? Before we ever take a trade, we need to know 3 things: entries, stops, and targets. And all 3 of those things need to align, right? In some type of Power Ranger or Captain Planet type of beast, right? To make a quality trade. And if I walk you through what we had here, here's what I was looking at. Our ATR on my entry candle. So this would have been my entry candle right here, right? The 3rd candle in this 3-bar reversal. The ATR, the average true range, on my entry candle was 16. I want to go to the high of my previous candle right here, which is 140.14. Add 16 to that, and that's going to put me at 140.30. Then I want to take my dandy little risk reward tool right here, put it to short. I'm going to plant it right on that entry. I'm going to drag my stop loss up to the high right here, and I'm going to drag this down to my would-be profit level, which again was right above or right at a retest of our previous neckline. And unfortunately, you're going to see that the red section is bigger than the green section, which means this is an inverse risk reward. Now, I know what you're saying, right? Don't say it yet. I'm going to answer that question for you. Akil, can't you just, right? That's me making sure no one's looking because I'm a trader and I can do whatever I want, right? Based on the whole discretionary trading series that we just ended. Can't you just make an adjustment? Can't you just move your target down here? Because look at that. Now the risk reward works. Well, I could, but I don't actually predict that price is going to go there. And does it make sense for me to, in order for me to be right, price has to go to a place that I don't necessarily think will go to? That doesn't seem like a smart choice, right? So that's like placing a bet on the team that I don't think is going to win. Okay, so let's move that back here. Okay, well, you can't move that. Well, can't you move your stop loss down so you have that 1-to-1? Well, remember the video, right? The 3rd part of the series we did on discretionary trading. We specifically looked at stop losses. I specifically told you I have a zone, right? A 1 ATR is my floor. A 2 ATR is my ceiling. I have discretion to operate and finagle and move and shift wherever in that zone, but I can't go lower than my minimum. I can't go higher than my maximum. And this line right here, well, this is my minimum. So I'm stuck like Chuck. Now, there is one thing that I can do, and this is what I've been doing. I can look for a secondary reason for entry. And for me, a secondary reason for entry in this case would have been a double top. Price action comes down here, or price action, let's do it from the beginning. Price action spikes up here. We then push down. I don't get my entry reason because, risk reward doesn't work. But if price were to retest, right, do something like that and give me a double top, all of a sudden, right, stops are going to be in the same place, most likely. Targets are definitely going to be in the same place. Now I have a risk reward that meets my requirements and I can get involved in the trade. The problem was the market just died and went sideways, and I do not have that. So we'll see. Maybe I wake up in the morning and it is there and I have a chance to get involved, but I wanted to record this and follow up on it just so I don't get lazy and not do it tomorrow. Speaking of being lazy, don't be lazy. Hit that like button if you enjoyed the video. Subscribe if you're not subscribed already. And remember, we have that online trading workshop coming up at the end of November. Limited seats. Once they're filled up, you can't get in, so don't procrastinate, don't be lazy, register now, and I'm looking forward to seeing you there. Until next time, plan your trade your plan. If you guys are new to the channel, check out the Trading Coach podcast, right? We have some video episodes here, but all the audio episodes are available on your favorite podcasting app, so Spotify and Apple, check them out. It is a abundance of great trading information. That's what I'm told by people that leave nice comments and reviews, so you should check it out so that you can take advantage of that information and become a better version of the trader version of you. I'm tired. Good night.